Yeah, I'm losing my
So with the
edge.
election day in hand here, Pete, we are going to go through our election trading checklist. And I want to start out by saying, it's Tuesday afternoon. We've got the Tuesday night trade, which is going to be volatile. And we're going to get to that in a second. A lot of back and forth is definitely coming. No matter Biden right now is the favorite. If he just continues to be the favorite until he wins, still going to be a ton of back and forth. If Trump comes into play and he ends up winning, going to be a ton of back and forth. But we've already seen a little bit of this, Pete. Yesterday and this afternoon, a real big bullish bang to kick off election week. Yesterday, the broad equity markets higher by about 1.5%. And you and I kind of wrote that off as being a bounce back from the selling at the end of last week. But now it's an extension on that. And I think that we're fully in a little bit of this pre-election trend because we set expectations around now what is going to happen today, tonight, and tomorrow, other than just a rise in volatility. Of course, we can expect that. And like I just outlined, no matter who wins, or if we don't, especially if we don't figure out who has won by the end of tonight, there is going to be a ton of volatility. But what else can we expect? And I think we're already kind of seeing it, Pete, because we crunched these numbers a little bit last week. On average, you've seen a stock rally beforehand and a stock sell off afterwards. And I think we might be in the midst of it. An average move of 1.2% higher the day before the election, this Tuesday here, and then almost a full reversal of that the next day, which will be Wednesday. Do you think that we're in the midst of that? And what does this value mean to you?
Sure feels like it, just on a supercharged basis. And in the time, the 40 minutes we've been on the show, that 2.1% up move in NASDAQ has been cuffed by almost more than 0.5%. So we're seeing that slipperiness play back and forth. So yeah, outsized performance here. What we're getting than what we've seen historically, I'd expect that. And I think this is, can you tell me, Frankie, how far back did you go on this?
So this is the last few elections here. Okay. This is just since I think the 2004 election. So the last 4 elections here, which actually take into account 2 Democratic and 2 Republican candidates winning. And you're not seeing a big difference here, aside from the fact that the day after, when a Republican has won, we saw actually some rallying. But what I would say is that in these Republican winners, there's just been less volatility.
Right.
With these Democratic winners, there's just been a larger move, a larger reflection of this number here, which averages out those Republicans and Democrats.
And I think that's actually the better note, because you could look at this right here and say, well, remember in 16 we were down 7%, so the 0.1 or the 1.2 isn't as relevant to me. But I think the average of these two is really what we're trying to look at, and I like that that contra piece from it, because I think net, and again, this doesn't account for, this is where we end up, not where the extreme for the day was at one point.
Absolutely. So, good point. Because especially this number here, you would say to yourself, oh, well, if I think Trump is going to win, then I should just buy a ton here.
I'm on the close, right?
That when Trump won one of these 2 Republican data points, especially as he was gaining steam throughout the night, the stock market sold off huge.
Yeah, we were limited.
It was a 100-point sell-off when S&Ps, Pete, were at 2,400. So that was almost what, a 4 or 5% move.
7%
before it got back to profits. Yeah, it got as low as 7%. You're exactly right. And so it isn't a matter of taking these numbers here and saying, well, I think Joe Biden's going to win, so I'm going to sell the stock market and hold it until it's down. Or I think Trump's going to win, so I'm just going to buy it. No, you're going to see big moves back and forth that are going to potentially scare you out of that position and cause you to get out. And also, I would much rather, Pete, take that random back and forth that would freak me out of my long-term position and simply make that my trade. Not just like look at this and be like, oh, this is the trend that I have to ride out if I think Biden or Trump is going to win. No, I think that you just take this average here, which literally tells you that when the election is all said and done on election week and it's Wednesday afternoon, nothing on average has changed, and the stock market isn't going to be up or down 10% because of whoever is elected here. I take this statistic and I say, hey, this makes me confident in getting on the other side of these big moves. Democrat, Republican, Biden, Trump, whoever it is in whatever direction the move is in, I think I can feel confident with that.
Absolutely. And another strategy. So this is something I'm looking at. We'll see how things shake out around noon tomorrow and where we are in the process. And I know that if we're sitting up 80 or 100 points, that there's something to be had here for a little bit of bearish bias. Options come back in line, hopefully a little bit. And what I mean by that is liquidity. All of a sudden, you know what? Vol is going to be up. There's going to be premium to be had. So you're absolutely right.
And so what does this mean for investors who, have this long-term bias, or traders who are looking at, that back and forth that you and I are looking at? Well, I think that there's just one story here that dictates whatever type of investor or trader you are, which is tomorrow afternoon, most likely, on average, given historical results and what my own particular opinion is, most likely there's not going to be that much changed in the stock market, interest rate market, and everywhere down the line. So I would not uproot any investments or long-term biases just because of election day here.
But I love these
in the U.S.
The two final bullet points here are spot on.
So yeah, if I wouldn't uproot anything, I wouldn't change any researched, long-term trade that you have. You can absolutely hedge some of those positions using options or using smaller futures markets. If you have 50 grand invested in the stock market and you don't want to uproot that, which I do not advocate for uprooting that, but you do want to hedge some of it, then yeah, maybe you sell a small stock index future or two against it to hedge some of the volatility over the next 24 hours. But once again, I would not advocate uprooting those, but maybe managing some risk. On the other side of it, for those traders, the next 24 hours, if you want to follow trends, you're going to have to be real aggressive, because those moves are going to whip back and forth like that. You're not even going to be able to see most of them in your platform. So you're going to have to be real aggressive if you're saying to yourself, oh, stocks are starting to trend up. You need to jump on that train sooner rather than later, because it's going to be up, down really fast. Now, if you're going against the trend, which Pete and I are usually on this side of the trade, patience, have to be patient. We talk about this all the time, our joke, but I think it's really apt, is look for what is a crazy move and then double it. And that's the type of patience that you're going to need on a night like tonight with election day upon us here, and keep your election trading checklist handy.
Right. And this is this is not a bunch of home runs. This is a nice run of singles where you could have the opportunity to rack up a bunch of them. And that's the goal, because we've got smaller size. We've got wider expectations in terms of entry. Just keep that in mind. Great context, Frankie, a manageable, really practical checklist. Thanks so much.